What's going on, traders? Welcome to Eagle IFX. It's been quite some time since I uploaded a video, guys. I believe that you are having a fantastic new year and that your year has started on very well. So guys, I'm back again, and this time round I'm here to just share with you my journey on with MFF, that is a prop firm trading. I want to share with you. So I did go through this journey, and I actually passed. And yeah, so I just want to share with you lessons. I've been on this thing for some time, but I want to show you some lessons that I've learned all through the time that I've been trying to trade this thing. So guys, please remember to show some love by hitting on that like button, hitting on that subscribe button, turning on the notification bell so that you don't miss out on trades on videos that we upload. Right, guys, thank you so much. We are now actually at around 600 subscribers, guys. I believe that we can get it to 1,000 subscribers this February. So guys, share, show some love and support. Thank you so much, guys. So let's get into it. I want to show you, I want to take you through the journey, how I went through what I was actually looking for, and how I was able to actually successfully go through this thing. All right, so my first trade was actually odd card. All right, so guys, this was the setup, and as you can see, this was on the 24th of January 2023. Okay, this was actually my first trade. So you can see that from that I was actually looking for buying opportunities, and this was that flag that I've seen. So there was an impulse move. All right, as you can see here, we have an impulse move. Of course, I was expecting, after this correction, I was expecting the market to move up. And if you look keenly very well, you can see that this is where I took my trade. In the moment there was a breakout here and a retest, that is when I actually entered. If you go to the lower time frame, you see that is when I entered my buys. And what happened? The market came a bit lower to this level over here. So definitely it hit my stop loss and it went up. So once it broke this structure, all right, once it broke this structure, you can see there was a breakout here. Then it gave me another flag. That is when now I saw another opportunity to buy this. So you can see my first OD card. This is it. It hit my stop loss like you saw there, and you can see I lost $55, which is actually 1%. So what I was doing, that in this account, I was applying 1% risk. I was risking 1%. What happened? So I was able to, I took a loss, all right? Then I entered a buy, as you can see here. I took another, so I was hit loss. Then the other one, I took another buy. Then what happened? I was taken out on break even. But now after the breakout, like I showed you guys, after the breakout and retest, that is when now I took another buy setup. And as you can see, 205. So it took me up by 4%. So already I recovered this loss, and I was up with 4%. And what happened? And why did I exit on this trade? I did not exit on this trade. What happened is I was going for a meeting. So you see there was this level over here. So I placed my take profit here because I knew that I was not going to be able to monitor this trade. All right, so that's why I placed my take profit there, and that is the reason why it actually closed at. But what happened? Look at this. Do you see 4%? 4.06%. That is why. So risking 1% to make 4%, that is 205 that you saw. But what happened on this trade? This was massive. Look at that. Look at that. This trade actually ended up playing out 17%. So what does that mean? It means that you can actually pass with only one pair and one trade. So let's say if I hadn't placed my take profit here, all right, And even if I had exited here, you can see this is already 11.55%. Remember, phase 1, you only need 8%. So I needed to be somewhere around there to just complete my my phase 1. But what happened? I was taken out. I took my take profit there, no problem. Then the trade ended up playing 17.48%, which is okay. So now I was actually now looking for 2%, and that is when now I went to odd JPY. Yeah, so I was up by 4%, like I said. So now I needed another 4% to complete the 8%. So this OD card, so this recovered, this OD card gave me 4%. Then that's when I took 2 trades. I took odd JPY, so I traded odd JPY. And as you can see, it gave me close to 1%. So this is like almost like 2%. And then this is also another selling opportunity that I saw on odd JPY that gave me another 2% somewhere around there. And that is how I was able to complete it. And you can see after that, I mean, just some small trades. Why I took this small trade is because I actually finished my phase 1 within 3 days. And remember, the minimum days required is actually 5 days. So this one I was just opening these other days to just, so that it can be seen that I've traded for 5 days. And you can see this is the target. I passed the target, 417.79%. All right, and this is actually you can see 8.43%. The reason why it's 21, this was 21, then it went to 417 because of those small losses I was taking. It was just to push the days, and as you can see, with only 24 days left. So I started on a Tuesday, on the 24th or the 23rd thereabout, and I finished the next week on Tuesday. All right. So now, then from there, now I went to phase 2, all right? So phase 2 has been quite an interesting journey because now once I moved to phase 2, I needed now only a 5%, that is $250. And as you can see, I actually started it on the 31st, all right? That today is fast, yeah, just yesterday. And you can see that I actually finished just yesterday. And I only took a trade on US 30, a trade on Euro CHF and USD CHF. So let's look at this. Actually, these were my game changer trades. Okay. So let's start with US 30. Let me go to my watch list here. And I show you US 30. This was a trade. I mean, it was one very massive trade. So you can see that from this trade here, that we had actually a bullish, the market was on an uptrend, that's the bullish momentum, but it gave us, a bearish move here, which was actually, I saw it as a correction. And once we came down here, if you go lower to the 15 minutes time frame, it was giving us a structure like this. So I was waiting for breakout and retest, then I can ride the move to the upside. And what happened? Let me show you quickly. Let me just take this one out. You can see that. Let me go to the 15 minutes time frame. So you can see the structure. Of course, as it was going down, I did not enter immediately. Let me see. Yeah, I was actually, yes, I entered on buys. You can see my first buy. Now this trade, I was actually risking 0.5%. And these are the lessons that I'm going to talk about. The 3 lessons that I've learned so far. So initially, I started by risking 0.5%. Remember, this is US 30. You don't want to joke with US 30. It's actually called dirty 30. It can really mess you up. So you can see that I was on buys, all right? And I was right. But there was this move here, you see, because if I extend this, let me go back to the 1 hour time frame. You see, if I extend this, this one looked like a breakout, and there was a very strong, if I zoom this out, you can see that there was a very strong momentum here, bearish momentum, and this momentum is what actually made me do what? This is actually what made me close my trade. So if you look at this trade, I actually close it close to around there about. I actually manually close it. Then what did I do? I entered sell, right? I entered sell because to me this looked like a breakout and the market was going down. But now, even if I entered sell, this candlestick here is what actually made me realize that this was just something to catch people on the wrong side, or what we call market psychology or something like that. So a lot of people entered sells and they never exited their trades. And what happened? The market came back. So you can see, even though I entered my sell, I realized that no, this move wasn't a proper thing. This, close this, open this. So I decided to just relax and just observe the market. So what happened? I went to the lower time frame, okay? And then that is when now I saw this. I saw that this market was actually giving me a structure here. So let me take this back a bit like this. So I saw this. I saw one touch. I saw another touch. Then I saw the third touch. And then there was this candlestick rejection over there. That is when I knew that this market was doing what? This market was going to buy. So what did I do? I did not just enter blindly. Okay, let's go lower, further lower to the 15 minutes time frame. And what happened on the 15 minutes time frame? Now you can see the structure, very clean, clean structure. So what did I do? You can see this structure also gave us 1 and 2 and 3. You can see the multi-touch confirmation. So what was I waiting? I was waiting for a breakout and retest, and then I can be able to continue on this trade. And what happened? You can see there was a breakout. The market came back again, did some sort of retest. You can see that the market was retesting this level over here. And then you can see that, yeah, you can see that level over there. And then what happened? The market just moved. So at this particular point here, that is where now I entered my buys. I placed my stop loss here. And then I just let the market play. So you can see it moved all the way to this point over here. Then I think I closed my trades. You can see, yeah, I just closed my trade with 2%. And then you can see that the market came back all the way, but then it just kept going up and up and up and up and up and up. And of course, this was the overall target, which is around 11.67. And then, but it ended up playing 10.5. To actually share this with some of my friends who we are on in a particular group. So if you want to join my VIP, guys, the link is on the description. You can hit me up and I can add you that. And this one just played out. The next trade that I was trading on was USDCHF. I mean, this was massive trade. You can see that the market had given us this structure over here. Then, of course, we had 3 touches over there. All right. Then we had this. If you can look here, there's something like a structure over there. All right. So there was this double, sort of like a double top. Okay. But what did I do? I did not just trade this pair. You can see USD CHF over here. I did not just trade it because of this. There was this high over here, and I felt that the market could actually come all the way to fill this level. And you see, somebody who was just keen on here might easily say that this double top or whatever has been invalidated. Then the market broke out, came back again and gave us this thing. Then I actually entered somewhere around here. Now, even though I entered this trade, and you can see that it gave us what? A clean 2 touches over here, double top over there. Of course, this is just mass psychology. A lot of people end as their buy, and then look, the market will just come back. What happened? Then if you go to the, I think the 15 minutes time frame, yeah, you can see that now when I saw this double top over there, so you can see that even though we are operating on a bigger double top, and even if you look at this, there's almost like a scoop here. So of course I was expecting a fall. There was another, let's even go further down to the 5 minutes time frame. You can see that there was another, almost even a triple top formed over here. Then once the market pushed downside, then gave us a retest, that is when now I entered my sales over there. And as you can see, man, it went down and down and down and down and down. Okay, it actually ended up playing 8.37. So you can see that even just this one trade could have actually finished, but this one I had also risked 0.5%. So you can see I actually closed it with around $72, and then there was this Euro CHF. This was another trade that this was another trade, but this one, so this one was 0.5%, US30 was 0.5%, and then there was this Euro CHF. This was also beautiful. You can see that we came from an impulse move, we are actually on a correction. Then also here it gave me something like a scoop, so definitely I was looking to sell it to the downside. Now let me show you something here. This could have easily caught you off guard. As you can see here, looks like a double or a triple top over here, which seems invalidated. Actually, the reason why I played this line over here, I actually went to the line chart, and then I said that, look, I want to see how this market is going to behave once it get to this to that level over there. And you can see the market spiked once to that level, touched that level, then came back. Then I think yeah, on the 5 minutes time frame or so, yeah, that is where now I enter. This was actually a sniper entry. You can see it came all the way. That was my entry. Stop loss was 8.4 pips, and then risking 1%. And then look at this. Look at this. It just went down. It ended up playing also 11.58. This is massive, guys. You can actually do this thing with one trade and you can pass it. All right, so now what are the lessons? And let me show you. You can see this is there. So that one I have already completed that. So these are the trades, as you can see, just one day. And this is the overall 5,250. So that was 5%, and you can see this was 8%, and I have already finished. So now I finished with one day, and definitely I have to fulfill my what is it called, my minimum trading days of 5 days. So what I'm doing is that I'm currently just opening trades, you know, just 0.01, you know, just playing around that till the 5 days are over. Then I can now be able to get my funded account. Now, what are the lessons that I have learned with my journey with MFF? And guys, remember, there's something I'm going to show you very powerful. Number one, buy an account that you can afford to lose. What does that mean? I learned this lesson from YouTube, from a guy. I think he's called InstaForex. Shout out to that guy. Yeah, I think it's him I learned from. He said that buy an account that you can afford to lose. That means that if you can have, let's say MFF, $5,000 account is around $49. Can you afford to lose that? Then buy that. All right. What does that mean? Instead of maybe going for a 200K account straight, of which it's around $900, of which if you lose, you make a mistake and you lose it, then it will take you a long time to be able to come back again. Why don't you rather take a small account, maybe take a 5K account or take a 10K account, and use the profits that you are going to compound from the 5K account to buy a big account. So that's what I said, that use the profits from that account by compounding to get a bigger account. What I'm planning to do once I get my live account is to start now to combine the profits. All right, so whatever I get, I keep aside, I put aside, and then I save it, and then I reinvest back, and I am actually going for a 200K account. That's actually my next target. I said I started, if you watch my channel, you'll see, I started with a 10K account. I passed phase 1, then I failed on phase 2. All right? That is when now I learned that rather go for a small account. So whether if you're doing MFF or you're doing FTMO, you can go for a small account, so that if you have $500 and this account is costing you, and you can afford to lose the $500, and this account is costing you $100, then it means that even if you lose once, you still have money to reinvest back. All right? But well, that is my style. If you can still go for the 200 account straight directly, well and good. But I want to talk to traders who are struggling. I want to talk to people who don't have a lot of money, who want to get funded, who want to scale up, but they don't have a lot of money. So once you see that you cannot, let's say you have like you've gotten some $200 somewhere, or a $100 somewhere. Remember, if you buy a 5K account and then you lose it, which is you paid around $49, MFF gives you a 10%. I think when if you do a whatever, so it means 10% off. They give you a discount of 10% off. So it means that you're going to pay $44. All right. So it means $44 is something that you can be able to raise, rather than losing $900 and then now trying to raise another $900. I don't know about you, but I want to talk to those traders out here who do not have a lot of money. Okay, so that is lesson number 1. Lesson number 2, have rules and stick to your rules, come what may. Number 1, what is your risk management rule? Are you risking 1%? Are you risking 0.5%? Or are you risking 0.25%? Stick to your rules, all right? I did a 10K account, I failed. I did another 5K account, I failed. Then I did now the 5K account. What did I learn? You see that you start today you see a trade, you're not sure this, you enter 0.25, then the trade moves 10%, then you're regretting, I wish I could have entered 1%, now could have finished. Then tomorrow you enter another trade 0.5%, then you lose it, then you start regretting, I wish I could have used 0.25%. Then the next day you go back to 0.25%, then the trade moves 15%. I have a trade on CAD JPY that I can show you guys. I remember that trade. Within 2 weeks, the trade moved 46%. My goodness. And so you start asking yourself, I wish I could have risked 1%. I would have passed this thing within hours. So what is your risk management rule? If it's 1%, stick to 1% till you pass it. You enter today 1%, you hit your profits. Even if you go up 6%, 7%, stick to that. Don't now start raising and say, I want to risk 1.5 so I can pass it quickly. No, stick to your risk management rule of whatever you're going to choose. If you're going to choose 1%, 0.5%, 0.25%, whatever you're going to choose is up to you. Just remember that the maximum drawdown is 5%. Number 2, number of trades per day. Now, what does that mean? And I'm gonna combine points about this point here and number 2, number of trades per day with maximum account exposure. Now, what I had told myself at this particular time is that I am going to take 2 trades per day maximum, and then the maximum account exposure I'm going to do is between 1.5 and 2%. What does that mean? It means that if I'm risking 1%, then I can take 2 trades. If I lose one, I can take another one. If I gain one, I can take another one. So that means I'm risking 2%. Or if I'm risking 0.5%, then in a day, I'll be able to take, let's say like 4 trades. Because remember, the maximum account exposure here, let's say the maximum account exposure is, let's even call it 1.5, because I was working with 1.5. So 1.5 That is what I was risking. So it means that if I'm risking 1%, then I can only take one trade with 1%, another trade with 0.5%. If I'm taking 0.5%, it means that I can take 3 trades per day. If I'm taking 0.25%, it means that I can take 6 trades in a day. So number of trades per day is actually, you must know the number of trades you are going to take per day depending on your maximum account exposure. If you decide to stick to, I'm gonna risk only 1%, and my account exposure, maximum account exposure is going to be 1%, it means that you can only take 1 trade in a day. All right, that is lesson number 2. Lesson number 3, which has made a lot of traders lose: be extra careful once you pass phase 1. A lot of traders fail phase 2 because of overconfidence. Meanwhile, you have a whole 60 days to get only 5%. Listen, once you pass phase 1, you've been able to get 8%. Now you are in phase 2 where you need only 5%. There's some level of overconfidence that comes upon you. There's some level of greed. There's some level of, it's like you're in a hurry to finish this thing that makes you become so overconfident, makes you not stick to your rules. And I'm talking from experience. I did a 10K account. Boom, within a week, I'd hit it. Then I entered phase 2. I don't know what happened. Guys, and I can tell you what happened. It was overconfidence. You see, now I started risking I started exposing my account 2%. My maximum exposure moved to around 4%. And before I could realize, I have breached the account. So be careful. Be extra careful. The same way you are able to stick to your rules in phase 1, stick to the same rules in phase 2. If you did 1% here, do 1% here. Don't do 0.5% or don't do 0.25. Don't risk 0.25% in phase 1. Then you come to phase 2 and you want to risk 1%. That is overconfidence. And what is going to happen? You are going to easily lose that account. And remember now, you feel like you have won. So what is going to happen? You'll be taking trades, you'll not be careful and everything. So you're not sticking to your plans. All right. So this is one thing I've seen. I know a lot of people who have done, and I've seen, you see people, somebody goes through the struggle of getting the 8% within the 30 days. They go through it. Once they get to phase 2, you don't know what happens. And remember, phase 1, you only have 30 days. Phase 2, you have 60 days. So take your time. There is no rush. There is no rush. There is no rush. Maybe one thing I could have added here on number 2 is your risk to reward. All right. So we are talking about RR. Okay. Risk to reward. So, well, you can take a minimum of maybe 1:2 or 1:3. I don't actually, I don't like confining myself in that. And the reason is one, because if you look at this kind of trade, all right, let's assume that your target was here, okay? There was this level over here. That means that you could have exited this trade with 2.44%. But what happened? This trade ended up playing 11.64. So you see that you keep regretting. Oh, I wish I could have just let that trade play on. Oh, I wish I could have done this. So what do? What you can do is that once you move 1% in profit, move your stop loss to break even. All right. And now keep trailing your stop loss. Keep trailing your stop loss until you see that you've been able to either get your percentage or until you are taken out. Let's say, for example, like here, you'll have been taken out on 7.85%. So you want to stick to your rules. Number 1, you want to buy an account that you can afford to lose. All right. Some of you can afford to lose $900. So you'll go for the 200K account, FTMO 200K account, MFF. It's okay. But if you cannot be able to lose, you cannot afford to lose that kind of amount, go for a small account. Compound the profits, all right, and buy a big account. Number 2, have rules and stick to your rules, come what may. Number 3, be extra careful once you pass your phase 1. So guys, that has been my journey. I'm now just waiting to get funded to start my account. So I'll be sharing with you my journey, how I'm compounding, how I'll be compounding my profits, how I'll be moving from glory to glory. And now my target is to actually compound my profits and be able to get to buy a 200K account. Once I get a 200K account on MFF, maybe compound it all the way, maybe to their maximum, which is 600K, then I can move to FTMO, which is also a very good prop firm. All right. So the reason why I like MFF is because they have a 5K account, which is affordable, around $49. But FTMO, they start from 10K, which is around $90 something. So if you don't have $90 something, but you have $40, you can still join in the journey. And then also the difference is also their drawdown, of which maybe I will let me know if you like me to talk about the maximum the daily drawdown limit, comparing the two between MFF and FTMO. Let me know on the comment section below. Also guys, let me know your experience. Have you ever gone through this funded accounts? What was your experience? How did you find it? What did you go through? Did you pass? Did you fail? What are the lessons you learned? Leave that comment on the comment section below. And guys, like, subscribe and share. Let's get this channel to 1,000 subscribers. Guys, I'll be so grateful. So thank you so much for your time. Thank you so much for watching. If you want to join my free Telegram group, the link is on the description. If you want to join my Discord, the link is on the description. You can reach me out on Telegram or on Instagram. You can follow me on all my social media: Instagram, InstaForex, Facebook, InstaFX, and and Telegram. Right? I said Telegram, I said Facebook, I said Instagram. Reach me out and we are going to work together. All right, guys, it's been a pleasure. Thank you so much. See you on the next episode. InstaFX signing out.